Now we shall start our next topic, that is check system in the money and credit of chapter 3 of economics class 10. Now in check system, what things would be happen in a check system? A check is a kind of a monetary system only. It is deposit in the banks and offers the customer the facilities of issuing checks. The bank will offer some of the customers to have a check system for depositing or withdrawal of any of the money. Now a check is a kind of a paper instructing the bank to pay a specific amount which was from the person's own account to the person whose name was there in a check to be paid on that. Now receipt of the check can be deposited in his own account in his bank. Now the money is transferred from one bank to another bank in a couple of 2, 3, 4, 5 days. Now according to area or distance covering from there, that according to this only the check had been able to withdraw for within a few days. Now the transaction is completely without any payment system of cash. These things would be happen without payment of any of the cash regarding with this. Now this is the safest mode of transfer the amount or money, avoiding any possibility of any threat system. So it is very safe to exchange our money system according to the check system. You can see over here a check is look like this one. Nowadays it was a box type according to their number of days, number of month, number of year. Now a check is containing the name of the person whom we have to pay the amount. The amount number would be written on the numbering and the words. The account number is mentioned and the check number is mentioned on the check. And after that, here the signature you have to put on your signature whom you are able to going to pay. Now here you can see it is a double cross line, parallel line had been made, which means the check is now cancelled and issued for someone. After this, after the check system, there is a role of RBI. Now who is RBI? RBI is the main supervision or supervisor of all the banks related with our country in India. Now issuing the currency note, banker to the government. It is the role of RBI is for issuing the currency note, coins, etc. in the country. After that, they will also rule in the bankers to the government. The government requires some of the money for their day-to-day work, for having some bills or the project work. The government also requires some money system. So these monies are provided by the bank, and the head of the all bank in our country, RBI, regulates these all policies. Afterwards, the banker's bank come the supervisor, as I told you earlier. The RBI is the banker's bank. It is the main supervisor of our country. Monetary regulation and management is also done by the RBI. Exchange of management and control means exchange of money in terms of different currency of different parts of the world country. That currency is also managed and controlled through the means of RBI itself. And last one, they are having the collection of all the details, all the data related with transaction done with other banking system or the publication. Now earlier Urjit Patel was our RBI governor. Nowadays different person is there. Some Das is there. Now loan system. There is also a loan system in our country in a banking sector by which the banks will provide you loan, different kinds of loan for your daily work. A loan is termed as a money or lending money from an individual or organization or an entity to another individual, organization or entity. A loan is a kind of debt provided by an entity to another entity, such as loan was given by the banks and the bank will enjoy the interest rate on providing this loan. So they were having some profit on this by issuing the loan. Now the bank will only provide you loan by if you are having any promissory note or having any of the evidence with you. Now the principal amount is among the other things. Now how the bank will provide you the loan? The principal amount, whatever money you want to have to buy or borrow, that money is lent by the banks in a proper rate of interest and lending charges, and the date of repayment, how will you repay and on which day you will pay the amount. A loan is entails and relocation of the subject such as assets of a period of time. Now these transactions have been done in between the lender, that is known as bank officer, and the second one borrower as you, the bank account holder. The loan transaction is done between you both parties. We can take different kinds of loans such as vehicle loan, property, personal, business, etc. kind of loan from the bank. Now loan activities of bank, such loan activities of banks are: banks keep the small proportion of their deposit as in cash with themselves to pay the depositor who might come to withdraw money from the bank or any given day. Now the bank uses the major proportion of the deposits to extend the loans. In this way the bank mediate between those who have surplus funds, means that person who are the depositors. If they are depositing more amount, the bank will provide the funds or the loan more to number of persons. Now bank charges higher rate of interest on loan than what they offer in on deposits. Difference between what is charged from the borrower and what is paid to depositor is the main source of income, and coupon accepted successfully. This was the loan activities done by the bank. Here you can see we can take the loan from according to different festival seasons to buy such these products, and the what the bank will earn the profit. And we can also take loan or credit for the crop production, means for agricultural purpose. If the crop production will be failed, the credit purchases the person into a debt trade. So such time when we want to take loan, we have to be very careful that whether it is very necessary or not to take the loan from the bank, as we have to pay a huge amount of interest on behalf of these loan. Okay, now afterwards in our third part we can see the details with collateral type of banking system. Till then, thank you.